For more on all of this, as well as the markets, let's turn to David Zervos. He's CNBC contributor and chief market strategist at Jefferies. David, always great to see you.
Good to be here.
Fantastic to get your perspective because you were at the Fed, correct? You're a Fed economist at one point in your life.
Many years ago. Yeah.
Is there any reason, in your view, as a market strategist now, to question the methodology of how jobs are calculated? That there might be a political aspect to it.
I mean, I think we always want to question the data. We know it could be done better. I think your point, Melissa, was a good one. Why is it that it seems more volatile now than it's been in the past? And I don't think we have good answers to that. I think this administration sees a lot of politics behind the scenes, and it's a little worried about how those politics are playing out. It sees a swamp. It's called it a swamp in both Trump 1 and in Trump 2. And I think they're sort of maybe shooting first and asking questions later a little bit when it comes to appointees. And they have the right to change these folks out. That's kind of the prerogative of the president. These are political appointees with Senate confirmation. And to the extent that the September rate cut seemed to have some political biases in it, you could go back all the way to Janet Yellen in 2016 and her non-commitment to raise rates after she was committed to raise rates going into the initial Trump 1 election. There's a lot of undercurrents of politicization that I think are there. And I think, kind of gutting it is sort of not to be, I'm not surprised by it. Let's put it that way.
Would you be concerned? I mean, I don't know how the interview process is going to go for a position where you are calculating data.
Yeah.
What would they say? Well, how would you have seen the September jobs report? Oh, you would have seen a better labor. You're hired. You got the job. I don't know if that's going to make anybody feel any better either. That's also politicization in another way. So
I think that's right. I think that job in particular is supposed to be a non-political. Even though it's a political appointee, it's stated that it's a statistics job, right? It's not meant to have political views. You're supposed to be taking a stand on the data. So I kind of like Mohamed El-Arian's discussion earlier today. He tweeted a bit. We just need to get better at the data. Let's put some resources behind it. Let's get better at it. This is just, I think, more about a failure about getting these numbers right and looking, at anybody's job performance. If you're having that many revisions, maybe it is time for a change. Right. And I think that's a fair way to look at this one.
David, I'm trying to look at catalysts for the market. So
yeah.
when we look at the trade deals, 70% or thereabouts have been inked.
Yeah.
Not that they've been finalized, but they've been inked. What are we looking for the China deal, and when do you think that gets done? Best case scenario, and is that the next catalyst for the market?
I mean, I think the Secretary of the Treasury made it very clear this is happening fast. They're looking at the European deal, they're looking at the Japanese deal, and they're probably like, holy cow, that happened faster and more aggressively than we thought, and they need to make a move. So I think that's all going to happen relatively quick. The question really is, how important is it for the market? Because the initial, when we were back in April and we were here and the world was going crazy, the impact was huge. And now it's just people are looking at this and going, okay, I get it. The whole idea was simple. He did the classic art of the deal. He came in and he said, I'm going to disrupt. I'm going to get everybody to the table. I'm going to make a deal. And I'm going to make a deal that's fair for the United States because I hold the cards. I hold the cards because we're more cooperative than our trading partners. So they have more to lose. Now, he took that bet. It could have gone wrong. It could have. But the bet was because they had more to lose, they'd come to the table and they'd give something up. And that looks like exactly what's happened. So I think the market is now conditioned to understand what the technique is so they don't get scared when the big numbers get thrown out. Even Switzerland, which was like almost 40%. I wouldn't be surprised if the Swiss are back at the table going, you know what? We got to figure out how to get this thing down. Like, okay, what do we need to do? And we're back at 15 or 20 before you know it because they made some concessions, they did some investments, they did something. That's the deal. And I just don't think these are going to drive markets anything like what they drove in April. We're going to be driven by monetary policy. We're going to be driven by what changes in as the one big beautiful bill goes into enactment and the investment comes in and we start to see that filtering through the data and the economic data.